Good morning, everybody, and welcome to the Seiler Wealth Management video blog. Today is Thursday, March the 3rd, and lo and behold, we may have 3 weeks of a stock market rally, barring any really bad things going on today or tomorrow. And so far this morning, markets are down slightly, but that's okay. We've had some pretty good days in a row. In fact, yesterday was really impressive because you would think we've had a pretty good move forward. You have to just digest that move. Markets don't go straight up, markets don't go straight down. So when they're going up, you have to think they're going to come back for a day or two and take a breather. Well, it started out that way yesterday, and then we had that big late day rally. Remember, I've said this many times. You want to see the close be strong. It's much more important to have a stronger closing than a stronger opening, in my opinion. Okay, so we've had a pretty good rally. And if you look back at my videos, and I encourage you to go back and listen, because back on February 23rd, I said I think the market saw its lows and we're bottoming, and we have bottomed, there's no doubt. So now what happens is the trend has changed from going down, 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 bouncing up one day, then going down, down, down again, to going up, up, pull back a little bit, then going up again. Now, how long this lasts, I don't know, but I do believe it'll last probably the next couple of months. Things are getting a little bit more clearer in the presidential trail. Of course, 2012 presidential candidate Mitt Romney may throw a whole monkey wrench in everything today. Apparently, he's going to give a speech in Utah, and he's going to say that Donald Trump's a phony, et cetera, et cetera. He's trying to get the Republicans not to vote for him. So right now, Wall Street's thinking, okay, it's a Hillary versus Donald presidential election. Let's go ahead and start designing our portfolios based on that. So we'll see what happens after Mitt's speech, which, in my opinion, if Mitt were running today, he'd be the nominee certainly, and probably win. So that's something to keep an eye on. Tomorrow will be the jobs report for February. They report the first Friday of every month. All right, first Friday of the month, it's the jobs for the Labor Department come up, jobs for February. So we'll see how those come out. And we love to see things at 200,000 or better, and we'll go from there. Now, I want to make sure everybody understands that we have a really nice event coming up. And we're going to do this more often, because I'm not doing big events right now. We're doing 6-people events in my office because I want to be more intimate. I want to be able to field a lot of questions. And we are doing our Women and Investing event. That is March 15th. March 15th in my office right here in Longwood. Now, women face much different challenges than men do when it comes towards retirement. In fact, I have some stats here that at 65 years old, women at 65 years old make 25% less than men with all their retirement. In fact, Social Security on average in 2014 for men was almost 18,000, 17,900, and for women it's 13,800. So it's a big difference there. So women have just additional challenges, whether it's they were stay-at-home moms for a long time, or there's a divorce, or they do tend to live longer. So that's the stuff we're going to talk about. It's a really, really nice event. It's going to last an hour and 15 minutes in my office. I'll have some hors d'oeuvres, and we'll have some wine being served. So you have to call our office, or you have to just message me, and we'll reserve you a spot. If you can't make it in 2 weeks, which is March 15th, we'll do it again probably next month. So we're going to keep running these because this is a really good event. Take a look at your portfolios, and if you're looking for additional income, I'm seeing also high-yield bonds starting to get a little bit bottomy there. Because here's what's happening. High-yield bonds, which high yield is a nice word for junk bonds. Now, when people hear, oh my God, junk bonds, those are horrible. You're going to lose all your money. That's not the case. Junk bonds are really they're bonds. They're a little bit safer investment than equities or individual stocks. They are just for companies that are not as credit worthy. Okay, and an Apple corporate bond is a AAA rated, but yet an XYZ driller in the Gulf of Mexico may be a CCC rated. So that's the difference. Apple's more likely that they're always going to pay their interest payments. A CCC has a possibility of default, and that's what's happened here. Okay, the reason junk bonds got absolutely murdered and oil stocks got murdered, which by the way, they are bottoming as well. We're seeing, even when oil was down yesterday, the oil stocks are rallying big time. So I look for them to buy for a pullback too, but they're looking really good right now. So what happened is a lot of the issuers in the junk bond market are energy stocks, and we're seeing bankruptcies in the energy stocks. So what happens to Wall Street? Wall Street is a place of excess, and the pendulum, and I've said this before, my example is the pendulum swings both ways. When everything's hot and great, oh my God, the world's Nothing can go wrong. Absolutely nothing. We're going to make a ton of money. I should be a day trader all day long. That's usually time to get out. When 3 weeks ago, if you watch TV, and I was probably one of the only ones saying, you know what, things aren't that bad. Everybody's saying the world is coming to an end, the sun's in my eyes, pebble in my shoe, et cetera, et cetera. So the pendulum swung way over there. Now the high yield bonds or junk bonds are starting to get a little bit more fairly valued. Now, while you don't have maybe a ton of upside in them, here's what you do have. A lot of junk bond funds will yield you 6 to 7%. So you put your $10,000 in a high yield fund, I hate to say junk, high yield bond fund, and keep in mind, it's a fund, so they're diversified. They could have 100 bonds in that portfolio. So if one defaults, that's okay. So you have a portfolio, you put your $10,000 in, you're getting 6 or 7% annually, and you could dividend reinvest too. And you probably do have some upside. They have increased in value over the last couple of weeks. And again, we're on the midst of a 3-week rally. And I think as the oil stocks firm, and oil, the commodity, firms up, which is now at $34 a barrel roughly, and it was trading below 30, which was way in excess. High yield bonds are really probably not a bad place to be for part of your portfolio. So that's the kind of stuff we do, especially for the income seekers. If you're looking to get some income, it's a good place to be. Again, not for your entire portfolio, for a slice, 10% of your portfolio. Let's put that in at 6%, and you probably will have a total return of 10, 12, 14% by year end. All right, so that's a good thing. So let's take a look at that. Now, as for the market is concerned, I think we are a now buy on pullback market. I think it's safe now to buy on pullback. So when you see we've had a rally here for 3 or 4 days, it's inevitable we're going to have a pullback. I'd love to see a 100 or 200 point pullback over the next couple of sessions. If that happens, we're going to do some more buying. The key is keep the powder dry, have a little cash on the sideline, be prepared, or you make some swaps and move some things around. That's what we're doing. We're always reallocating our portfolios because we are actively managing the portfolios. We don't sit there and what I like to call buy and hope. Okay? And ask yourself if your advisor is prepared for a major decline in the market, which I don't see us having. But we look to have corrections throughout this whole process. So that being said, I'm going to draw a name. Actually, 2 names for the cruises. You guys are great. You're sharing my videos, so you like them, you share them. You get 2 entries for a cruise for 2 to the Bahamas. All you have to pay is port tax. That's something I can't do for you, and it's $70 a person. So the cruise is worth like $119 a person. So it's really a good deal. And it'll cost you $140 to go on it. It goes out of West Palm Beach, 2 nights, nice little getaway. First winner is Kim W. Kim W., you are a winner of a cruise for 2. I will contact you on Facebook. And the second winner is Jeffrey H. Jeffrey H., thank you for playing and sharing my videos and liking them, and I appreciate it. Again, I'm going to put the information in text about our March 15th video, Women in Investing. By the way, guys, Women in Investing should give you a clue. No guys allowed, except for the guys on my staff, and my assistant Patty will be there. Everybody have a fantastic day and great weekend. I'm the Stock Doctor, Lee Seiler, Seiler Wealth Management. You guys have a fantastic weekend.